What's up, y'all? Welcome to the Legacy Podcast. Tim Bratz here. I am sitting down with my buddy Nick Long today, who is a former teacher, former musician, turned real estate investor, and today he owns over 50 rental units, all multifamily, small multifamily properties in the Columbus, Ohio marketplace. Heavy cash flow. They're getting a lot of appreciation, and you're going to hear a lot about how he's transitioned from that corporate world into buying and holding rental real estate, and slow and steady wins the race. He's been doing this for over 15 years, has accumulated over 50 rentals, has built up a ton of equity in his portfolio, and he doubles down every handful of years on his portfolio. So I'm excited to sit down, hear about his story, hear about what he wishes he would have known earlier on in order to get to the place where he's at today with his rental portfolio, and what his goals are for the next 24, 36 months. Nick Long, what's going on, buddy?
Good to see you.
Welcome to the Legacy Podcast. So you're here in town. We're doing the Legacy Family meetup event here in Cleveland, and got about 25, 30 people from the mastermind coming out, and we're just gonna be hanging out, doing a one-day deep dive, and going around the room and hanging out over the next couple of days. So appreciate you coming up, man, and I love that you're on the podcast. So you have been one of the OG Legacy Family members, dude. And so you've been around for a few years now and have a portfolio of 50 plus doors out of the Columbus market. I want to hear your backstory. I want to hear how the business model and the growth and everything has occurred over time. I want to know what some of your goals are, what some of the things you wish you would have known earlier on in the business that you kind of learned along the way, that you think would have maybe made things less painful, right? Or made things a little bit smoother, and some advice that we can give to people who are looking to scale their portfolio to that size. So how did it all get started?
So I started out in education. I got a teaching degree back from OU. I know you're Miami guys. We're right down the road a little bit, but
dude, I had some of my best friends went to OU. I know they're like rivalries, but I had some great times at OU.
Yeah, it's great spot. But yeah, I got my teaching degree. I really wanted to be a rock star, so I went into music, and I was playing in a band, and we were recording CDs and playing around the state of Ohio and having a great time. But
what was the band?
It was called Longfellow.
Okay.
Graduated, we all had to get real jobs, and we were all spread around the state or whatever. And so I was...
Quick aside.
Yeah.
Do you know the guys from Iphonic?
I don't. No.
I think they're Cleveland guys that went to OU, though.
Oh, nice.
Yeah.
Nice. Very cool.
But I think they're a little... Well, when did you graduate?
All the way back in 03, so I've been around.
Yeah, so they're a little bit younger than us.
Okay.
I think they might be my year, because I graduated college in 07. But they might have been there right when you were transitioning out. So anyways, long story. But
cool.
All right. So you get the real world, get some jobs.
Yeah, I was teaching, and I was in Southeast Ohio. My first teaching job, young teacher, and I was getting up early in the mornings, and I was like, man, this is for the birds. I don't want to do this for 30 plus years. And I'm drinking my coffee one morning, getting ready for work. And all of a sudden, this infomercial comes on. Yeah, I don't know if anybody remembers Carlton Sheets. He was the original infomercial guy, or one of them. And I ordered the course. I was like, I want to get into real estate. I don't want to do what I'm doing for 30 years. So ordered the course, and I just started learning.
Yeah.
Self-educating. I wasn't in a spot where, like, I was in Southeast Ohio, so I wasn't crazy about buying in that market. Mm-hmm. So I started looking up in Zanesville, but the next year I got a job in Columbus. I moved to Columbus. I was teaching in Pickerington, and bought my first rental property. It was a duplex. Moved in and rented the other side out, and I was hooked from there.
Dude, I just did a video on this, and I think that's such a brilliant way to just get going. Like, I bought a house, and then I rented out the 2 bedrooms to a couple of my buddies, right? You bought a duplex, lived in one unit, rented out the other. Like, it's a way that people can get involved in real estate without having to be a full-time real estate investor, you know?
Yep.
If you got a full-time job and you're just looking to acquire a couple of assets to build some long-term wealth. Like, dude, it's an amazing way to do it. Just dude, swallow your pride and live in a friggin' duplex. Who cares, right?
Exactly.
Like live in a quadplex. If you can get one unit and then
Even better.
right? Exactly.
Even better.
Right? Show me how friggin' smart and cool you are by being good with your money. You know, like not how cool you are because you spend all your money on stupid shit and you're financially irresponsible. Like show me how cool you are because you own a 4-unit, you live in one, you rent out the other ones, and it covers your mortgage and you're financially free with your own primary residence. And then go do it again and again and again every few years. Dude, and you pick your head up after 10, 15 years, and you got 10 rentals or 15 or 30 rentals. And you're like, all because you just kept on house hacking multifamily doors for a decade of your life. And now you transform the next 100 years of your family's future, you know? It's like it's a powerful, powerful thing to do, and just I wish more people would get it, you know.
Especially when you're young. Like if I were to go back in time, and this is the advice that I give young investors today. I was like, house hack as many times as you can while you're in your 20s.
Hell yeah.
You don't have a family yet. And you can bounce around, and the more times you can cookie cutter that, the better.
Yep. And your spouse should be supportive, right?
Or eventually they'll be supportive.
Dude, my wife doesn't. Dude, I still rent my house. Like I'm up here for the summer. I have an oceanfront house on Isle of Palms, dude, and I'm worth tens of millions of dollars, right? I have an oceanfront house on Isle of Palms that I bought before values went up. But guess what, dude? I don't use it for 9-10 weeks, and I rent the house for the summer. It's a pain in the ass. I pack up all my stuff, put it in bins, put it in the basement. I have like a storage room in the basement. That's all temperature controlled, and like I finished it, right? And it cost me 10 grand to do it. But guess what? That $10,000 one time now, like all these shelves, all the kids' toys, all my personal stuff, all my wife's personal stuff, clothes. Like we don't have anything of real value other than clothes, right? Down there, and then it's a pain in the ass to unpack it all for a week when we get back. But it's 2 weeks of our life, and we net $100,000 when we're not using the house.
Yep.
You know what that pays for? That pays for my wife to not have to go and get a job. Right?
Yeah.
No, I love you, Kate. Love you, Kate. No, but it pays for an unbelievable trip to Europe, right? It pays for us to be able to we're going to South Africa next summer,
Nice.
right? And we're going to hang out for 2 to 3 weeks, fly first class, go all over the place, go on a safari, do the craziest, coolest stuff. And that'll be a small fraction of the amount of money that it makes, right? And we still do it just because it's a financially intelligent thing to do. Maybe one day we won't. Maybe one day it'll just be the guest house. Maybe one day, we'll decide not to. But dude, right now it's not like we bought it and it was a vacation rental. We put a bunch of money into it, fixed it all up, and but it's still not like our perfect like home kind of thing. So it's like, who cares if it gets torn up a little bit? Like, all right, so get a new couch every 2 years or whatever. Like, it doesn't friggin' matter, man. I just don't care. I don't come from that world. But my wife, dude, she hates it, but she's also like, she gets it. She was an accounting major.
Nice.
And she's like very financially responsible, so I have a ton of respect for that. And I plant the seed. She doesn't like me for a day or two, and then all of a sudden sleeps on it, and then she feels better about it the next day. And she's like, fine, I know it's the right thing to do. So anyways, but dude, I agree. Like house hack.
Yeah, so that was the start, and I started off small. Back in the aughts, you could go into a bank and you could fog a mirror and get a loan.
Yeah.
I'm sure you remember that. So on a teacher's salary, I bought like 4 or 5 duplexes, and didn't really know totally what I was doing. And then I just kind of sat on them. The market got weird after '08, right? And I had a lot of vacancy. I had a lot of CapEx costs, like people moving out, struggling with jobs and stuff like that.
How come you bought duplexes instead? Because you already had that experience, right? But like the people who bought rental property were able to withstand that whole crisis for the most part, right? And the people who bought speculative real estate or single family houses, they were the ones who really lost their ass.
Yeah.
What was going on in your head of why you bought a bunch of duplexes instead of buying single family, luxurious, brand new built houses?
Yeah, there are a million and one ways to invest in real estate, right? Mm-hmm. I was always after cash flow. I always wanted to create long-term wealth,
Yep.
but also have the cash flow. And so when I was looking at buying a single family home versus buying a duplex. I just thought that the cash flow was higher. If I could get 2 units for close to the price of 1, I was going to do that. My rent was going to be higher, and it just made more sense.
Dude, it makes so much sense. And I think if you can house hack, or if you can, like, anybody can get into the small multi stuff, right? Like, if you're buying anything up to 10 units, you know, we know Whit McCarthy, who can get you a debt service loan, which is like, it's based on your credit score and then the property's income, right? That's it. And as long as you have that, they're not wondering where the down payment comes from. They're not looking at your tax returns, not doing anything. Like, just go out and buy something. And there's resources to help you do that, like, right away. And I think everybody needs to go out and buy a duplex friggin' tomorrow, man. And I think it's just such a smart, simple way to get involved in real estate.
So after, I owned a very small amount, like about 10 doors for almost a decade. I was still doing the music thing. I still wanted to make that happen. Eventually I was just like, you know what? I think I'm done with music. I want to concentrate on real estate. We had started a family. I want to create wealth, long-term wealth for our family. So that's where my focus kind of became or went to. And so about 2011, 12, I just had a big refinancing event, and the rates were pretty good. So I pulled out a bunch of cash and then basically doubled the portfolio at that point, and stabilized that. And then in 2021, did it again after all that was stabilized, pulled more cash out and doubled the portfolio again. So, and I've been working through that for the past couple of years.
And so you own 100% of your doors.
Yeah. The only thing that I don't own 100% of is, is 10%. A wholesaler brought me a 14-unit property, and I paid that wholesaler. He didn't want cash. He said, I got plenty of cash. I actually want to build some equity in something. So we worked it out. I gave him 10% equity. I had the rest, and then I basically ran the deal.
I love it, dude. I mean, it's a great deal for him, and that's a great deal for you, right? It doesn't increase the cost basis, so your equity is actually worth more than, or probably the same as if you did pay him a fee anyways, right? Because if you're paying him a fee on that thing, like, you know, let's say your equity, it's worth $1 million, right? But it would be $1.1 million, right? Now you own 90% of $1 million, but you don't have that additional expense, right? So it's like, it ends up being the same anyways. And it's a great way to get into the deal, and he brings you the deal instead of giving it to somebody else.
Yeah, and that deal worked out really well. I think I bought that deal for it was 14 units. I bought it for like $725, and that property 2.5, 3 years later is now worth $1.5 million. So it turned out pretty well.
It's amazing. It's amazing. So, so what does it look like? Are you going to wait another decade until you can refinance the portfolio again and then double it again? Is that what we're doing here?
It's getting to a point. We've had so much appreciation in the market right now. It's really tempting to pull that cash out right now. Back in 21, I refinanced almost the entire portfolio and got the blended interest rate between 4% and 5%.
Yep.
So I've got all this debt at 4 and 5%, and I'm just slamming down principal right now, which is fantastic. And it's hard. You know, where's the tipping point? Where does it make sense for me to say, okay, I'll refinance half the portfolio or all of the portfolio for? Do I really want to double my interest rate right now in order to get that cash out and redeploy it? I don't like the idea of dead money, right? I want to put that money to work and keep it working. But so that's what I'm thinking about right now and trying to negotiate.
All right, are you okay talking numbers? Because I got some ideas.
Sure.
Okay. I mean, or we can talk numbers tomorrow. But we'll talk general concepts right now. All right, so let's say you got 50 doors. Let's say they're worth $100,000 a piece, $5 million portfolio, and your debt on it is, I don't know, $2.5 million. Let's call it, we'll just say it's 50% or 60%. We'll call it $3 million. How do we tap in to that additional $2 million of equity? You could sell it. We don't want to do that because we know that that's not how long-term wealth is built. You could refinance the whole thing, but by refinancing, dude, you're only going to take $500,000 off because the cost of the new debt is going to be so expensive, and it's going to cost you the same amount. You're not going to get that much money off the table, and probably cost you more than what you're paying right now on a monthly basis. So it's like, how do you tap into that? Dude, I would raise money, private money. And I'd say, out of my private investors, who wants to come in and I'll give you a second mortgage on the property, or I'll give you just a personally guaranteed note for 2 years or 3 years or 4 years on this thing, and I'll pay you 8% or 10%, whatever the number is. And you can tap into 500 grand at 10%, right? It costs you $50,000 a year, but it doesn't increase the basis of the rest of the money. You know, I don't have my phone on me, but you know, let's say you're at 4% on $3 million, it's $120,000 a year. If you refinance that all at a 6% or 7% loan, dude, you're at, you know, a lot more, right? You're at $210,000 instead of $120,000. And so you're able to still gain access to that additional money, maintain your rate, go out and buy some of these other properties, and still own 100% of those, or maybe you refinance those and pull some cash out of those and pay back these loans or something along those lines. But that's exactly what I would do, man.
Nice.
I'd go and get private money of a couple $100,000 to give you whatever you need, and that way it's not some big capital event. You don't have to go through all this paperwork and all this nonsense of underwriting and additional processing fees and loan closing fees and resetting the timeline on, like, dude, you're already 3-4 years into paying down interest and principal.
They're on a 20-year note as well.
Yeah.
So it's hard to let that go.
You don't want to do that. You don't want to do that. I would go out and find an interest-only private money lender to give you a couple $100,000. If you need to secure it in a second lien position, maybe do that. But otherwise, man, I would just say, hey, give me 500 grand or $100,000 across 5 different people, get access to $500,000, and then go and do it again.
Yeah.
Right? And then you can go buy a couple $1 million of property that way and just keep cranking it, man. Yeah. And then in a couple of years, if rates come down, as properties appreciate, as rents bump up, then you can look at throwing an actual second mortgage on there from a bank and swapping them out, or refinancing one of these over here that were at 6 or 7% interest rate that you bought with that money, but now rates are down, you can put them at 5, you can get your 200 grand, 500 grand back, pay those guys off, and then again, just house money and play then. But that's exactly what I would do, man.
Yeah.
I just set the expectation of 2 or 3 years out.
Yeah.
You know,
nice.
Put your money with us, 401k money, right? Like a self-directed IRA, self-directed 401k. That to me would be the path of least resistance with maintaining the blended cost pretty low for you.
Yeah, I like that.
You know, without making a long-term commitment of getting rid of this awesome financing. I was talking with Litzler yesterday on the mortgage broker side of things, and he's like, dude, the biggest developers and landlords that I know buy good properties in good areas, they self-manage, and they put on good long-term debt, fixed rate long-term debt, and then they hold it forever.
Yeah.
That's the key to wealth, right? That's it. and the more you can do that, just keep on buying good deals in good areas with great debt, and leave the great debt in place. Do not let the shiny objects deter you. If you always make the best decision for the long run, I think that's always going to be the best decision.
Yeah, it's not always the easiest decision.
No, it's not. It's usually not, right? The short-term circumstances, it can solve all these problems, but then it sets me up, and then future Nick's like, damn it, past Nick, right? It's like, what are we thinking? But that's great, man. So let's say you do that, and then the idea is everything's in your own backyard, right?
Yeah.
In Columbus?
Yep. Yeah, it's a great market right now. We've just had billions of dollars of investment come in from chip maker Intel. We've got Amazon, Google. They've all come into town. So Columbus has a lot going for it right now.
I see it consistently in the top 10, man.
Yeah.
And we were talking with Erin a little earlier, and she was talking about Cleveland, and then Columbus is always.
Cleveland's a great market right now.
Yeah.
And you can get lower price per door here, I think, too.
Lower price per door. Doesn't have as much business stuff, I think, going on as Columbus does right now, but it does have a lot of it's coming, you know. And transportation-wise, it's on the lake. It's right in the middle of Chicago and New York, so it's like along this I-80, I-90 corridor. So there's a lot of logistics that come back and forth. And so I think it's positioned really, really well. Columbus, obviously, the state capital. It's got Ohio State there. It's got everything else that comes with having big hospital systems, having big businesses, Fortune 500 companies headquartered there, and then all this tech stuff that's coming, man. I think you're in a great spot. And then I think Cincinnati's kind of one of those sleeper markets, you know?
Yeah.
I think Cincinnati's got some good stuff going on too. Being in that like tri-state area of Indiana, Ohio, and Kentucky, and there's a lot of good stuff happening down there as well. But yeah, man, I think overall, dude, the whole Ohio is poised for a lot of good investment growth, right? A lot of people looking for cash flow. You can get that and starting to see some appreciation too. Mm-hmm. So what does the next 24, 36 months look like for you?
So I've got a few projects that I'm finishing stabilizing. So once that's done, we were talking about fast money and slow money earlier. Mm-hmm. I've been in a position for a long time where I've just been working on that slow money. Mm-hmm. So not too long ago, I'm interested in land and potentially land flipping, land wholesaling, whatever you want to call it. And I got into a deal. I found some development land in Columbus, about 3.5 acres. Bought it about a year and a half ago. I got it for 150 grand.
That's awesome.
And it's I learned after I bought it, I didn't know how good it was.
Is it commercially zoned?
So it's residentially zoned, but there's a ton of commercial development happening in South Columbus right now. So I just kind of sat on it for a little bit, started talking to people, started, getting in some networking groups, building a story about what I want to do with it. I thought I wanted to develop it. I thought that was going to be this is going to be my first serious development deal. I'm going to raise some money. We're going to build some apartments. Then interest rates got kind of weird and broke my spreadsheet. Wasn't really making sense anymore. Mm-hmm. So I talked to my local broker, and he was like, look, I've got this developer out of Indiana. They really want to be in the market, and they've got all these government, tax credits and stuff. They're built out for that. They can still build. They're the only game in town that can still build and for it to make sense. So I was like, all right, so let's take it to him and see what we can get. And I just got a text from him while I was sitting here waiting to come on that he got a contract sent over to me, and we're at $525 for that.
That's awesome.
So
that's a great payday.
Good little pop, yeah. Now, as you know, like with developers, the lead out time is super long. The due diligence is super long. So it's like 225 days of due diligence. They got to get their, the zoning approvals and all that. But yeah, at the end of the day, it'll work out well. And so, maybe that's not fast money, but it's definitely a good pop for the bank account and to take that and redeploy it in other areas.
Well, I mean, dude, the beauty of it is you can go and raise money against that, right? Like if you wanted to gain access to some of that profit right now, you can go and put, I don't know, let's say you bought it for cash, but like you can go and put a $250,000 short-term loan on it, right? Pay somebody 10% on their money for 225 days, 9 months or whatever it is. And then have access to 250 grand right now, dude, and you're paying $20,000 on it, right? And you're just borrowing that money today, so that way the future sale could then pay for it. Yeah, you knock off $20,000, you pay it, but then you had access to that capital today to then buy some assets, position yourself, to buy some stuff before the end of the year, knowing that money will hit. Assuming it does, but what's the developer going to develop it into?
Apartments. Yeah.
Do they hold it or they sell them when they're done?
I don't know. Don't know the answer.
So here's what I would. Did you sign the contract yet?
No.
Here's what I would do. I'd go back and say, hey, what's your exit plan with this? I'll give it to you guys at $520, but I also want first right of refusal to buy it whenever you go to sell.
Okay.
That doesn't cost them anything.
Yeah.
And it allows you to match whatever other offer that they get. So there's no adverse effect to them, but it allows you to buy a brand new asset if and when they ever want to sell it. So if they have these tax credits and they run it for the next 10 years and then they sell it, dude, you can buy something for a discount in 10 years from now and you have first right of refusal to do it. And dude, it's no sweat off of their back, but it puts you and future you in a better position over and over and over again across all these land development deals.
Yeah, love that. Thank you.
For sure.
That's good.
For sure. I was talking with somebody at my buddy Mark Evans' event last month, and same thing. He wholesales, like repositions land, gets the right zoning in place, then he sells it off to the builders. And most of the builders build to sell. They don't build to rent or hold long term because like the builders need to transact on their money. And I was like, bro, get a first right of refusal. When they sell at CO in the future, make sure they come to you. I will come in and partner with you on it, on all that stuff. And so that's something that I think is an easy in with some of these builders in order to just, hey, I don't care if you sell it 10 years from now. I don't care if you sell it 2 years from now. I want to be able to look at it, right, if I'm bringing you this deal. And I think it's a great model to buy and have the opportunity to buy new assets without having to go through the headache of the development of it, because that's a lot of stress, man.
I learned that too as I was getting into all that. So with the first right of refusal, you don't set a price at the beginning, do you? You just have the right to buy it when they're ready to sell?
Yeah, and if they've taken a market and they have an offer at, $6 million, you have the right to buy it at the same exact terms that whatever their offer is. They have to show you those terms.
Gotcha.
That's not to say that you couldn't put an option agreement in place and say, hey man, I'll give it to you. When you build, I'll also be the buyer. If you're looking to sell this in 24 months after all the stuff is built out and in place and whatever, you're going to build it for $3 million and you're planning on selling it for $5 million, I'll come in and I'll buy it for $5 million because to you could be worth more, right? And again, it goes back to buying good properties. That's new properties in good areas. This is obviously a great area. It sounds like you can get great debt on it, fixed rate debt, because it's already built and stabilized, and you're getting lower insurance cost on it too, because it's all up to code. And then easy to manage because it rents itself, right? That's all easy, and then you just hold it forever, man. And that's something that isn't going to need a bunch of CapEx over the next 10, 15 years, 20 years, 30 years down the road, but there's going to be a lot of ups and downs and cycles and abilities to then sell at the top if you want, or refinance and take some money back out and then reinvest it into the asset in the future. But dude, if I'm in your game, that's exactly what I'm doing over and over and over again. Wholesaling the land, making a pop right there, and then having a first right of refusal to then build long-term wealth and have that as a play in the future.
Nice, like it.
So that's great, man. So is that something you think you're going to dive into deeper? Is the whole land wholesaling?
Yeah, I've enjoyed the process, and I've already got a website up and starting to send out direct mail and all that good stuff. So.
That's good, man. Yeah. Now I think, especially on land, it's very easy to, what I found is it's easy to have the conversation, and all the people who own land don't expect a quick closing. It's not like houses. It's not like multifamily. It's not like a bunch of earnest money needs to be put up. It's like, I'll buy it. What's the price? Oh, you'll sell or finance it too while we get all this stuff in place? Or they at least allow you to, for a small deposit, to then kick it out 6 months, 9 months, 12 months in order to then get all the right zonings and stuff in place. Now there's some outlay of cash there, but dude, there's big upside and potential in the land side of things. So I like it, man. I think that's a good space to be in. I think if I wasn't, where I am with buying the larger assets and all that stuff, then that would be on the short list of things that I would be pursuing. So that's good, bro. Well, dude, I appreciate you, man.
Hey.
It's an honor to have you in the mastermind. It's an honor to have you as one of the OGs in the mastermind too. And I'm excited for tomorrow. I'm excited to troubleshoot some problems for everybody and all of us give feedback and watch the growth happen. And just excited to see where the next couple of years lead for all of us. Dude, so where can everybody find you?
Yeah, so
connect with you and stay in touch and watch the journey.
Yeah, absolutely. So I have a few different websites. One is Invest in Boomerang. Boomerang Investments is the name of one of my companies. You can also find me on Instagram at Nick Long Show. So that's probably the best way.
I love it, dude. We'll tag you in the show notes and make sure that you guys have access to Nick. Connect with him. Great guy in a great market and doing great things. So definitely somebody you want to stay connected with, follow, and if you're in the market in Columbus, somebody to connect with for sure. So appreciate you guys being here. We'll see you next week on the Legacy Podcast. Hey, I really appreciate you guys being here for the Legacy Podcast. If you would, please subscribe, like, and ask any sort of questions that you have in the comments of this video. I'd be happy to create some other content and answer any sort of questions that you might have. So I appreciate you being here. We're here every Sunday. I'll see you next week on the Legacy Podcast.